Good evening, everyone. Time for another silver update. This is the 5-minute chart of silver provided by netdania.com. You can click on the link below. Now, the reason that I'm bringing this chart up, I'm going to be talking about supply and demand and price and markets. And I just wanted to show you, this is over the course of 3 trading days, basically, and you can see the dramatic price changes here. We're talking about 31.2 up to 32.2, we'll just say. So this is a $1 or roughly a 3% price move. Now you can see a 3% price move up, a 3% price move down, a 2 or so price move up, and then we're backing and filling. You can see that dramatic move, and then another one back up. So what does this all mean? The main thing that this means is that this is not a real market. This is price action that is based upon nothing but news stories that come out. You can see by the volume here, we have huge surges of volume and huge surges of volume on the downside, and then huge surges on the upside. So as Bixweir points out, this is just computer programs trading back and forth with one another. This isn't a real market. Real markets don't trade this way, and ultimately the resolution is going to be a price explosion when the real demand for silver is discovered. Of course, that's going to be based on the exposure of the fact that there is rehypothecated silver all around the world, and this is just computers betting on the availability of paper silver, which really has nothing to do with the real price of silver, and the real price of silver is going to disconnect from the paper price. But anybody looking at this chart can see that this is not a real market. Now, before we get into some of the details of these concepts, these economic concepts that go into supply, demand, and price, I wanted to take one of the questions because I think this one is important, and this is about numismatics. This is something I covered quite a bit, so I'm going to rehash that because I don't think it's clear, and this is from Nothing Rhymes with Silver. Brother John, other than limited mintage, what are the qualities of a coin that make it numismatic? When the short squeeze comes, do you think some coins that are not considered numismatic will trade at premiums? For example, the Johnson Matthey bars. Many bars and coins are made from a trusted brand, and they are individually numbered as well. Okay, so that's an excellent question. There are a lot of, first let's start with the definition of numismatic. Numismatic, a term that would be equal to that would be collectible. Silver that is numismatic or semi-numismatic is silver that has a premium due to the fact that it is desired by the public at a higher price than bullion. Now, I'm not going to say that it's numismatic because it's rare, although that is one of the factors that goes into making something numismatic. I've always liked the Perth Mint products. They have a low number mintage, and but as you've seen with Chris Duane's medallions that he's putting out, they have an intentionally low mintage, and they're starting to demand a premium. So definitely the rarity of the issue will go into that numismatic value, but also, as he points out with Johnson Matthey, the fact that it is a trusted brand. Now that's going to get into the issue of counterfeiting, and the issue of counterfeiting is also key, and that's going to have to do with the beauty of the issue. That's another reason why I prefer the Perth Mint products, because of the design and the difficulty of counterfeiting that design. When you're talking about bars, then you're talking about these individually numbered bars, and of course if you end up having 2 bars with the same number, you're going to have a problem. But that's not really a lot of protection because, of course, how are you going to prove for sure unless there's a website that documents every numbered bar that's out there and who owns it, or they could just take a number that's outside of that series. So that's not a big protection, and for that reason I really don't consider bars to be numismatic. Now, there are the Swiss bars that are in the sealed containers with a number, and you find that with palladium, but silver is just so low of a price at this point that you don't find a lot of silver being sold, although you do find the PCGS and NGC graded coins. Those do have a premium. So one of the big factors that goes into making something numismatic is going to be its rarity. The other factor is going to be its uncounterfeitability, which will give it a trusted value. Now, there are a lot of other things that go into why you want numismatics or semi-numismatics. As I've said before, having strong hands, the fact that the premium is large and grows, and even when you have large smackdowns in the price of silver, you don't see that type of decrease, at least if you're looking at eBay prices, you don't see that type of decrease on the numismatic coins. They tend to just rise in a fairly steady line, and they don't move with these violent movements that you see in the fake market for paper silver. Now, another very big and important point about numismatics is that if you remember back in 1933 when there was, I won't use the term confiscation, it was more of a forced sale of gold, but at that time numismatics were excluded. So if you have a coin that's selling for $80 and the price of silver is $30, it's highly unlikely that any government confiscation, and I don't think that's likely anyway, but any government confiscation would be unlikely to include a coin that's trading at 100+% premium above bullion. It's most likely that that would just include bullion coins or coins and bars that are very close to bullion. So that's a number of the reasons and the definitions, and that's why I prefer semi-numismatics. Now, again, I use the term semi-numismatics, meaning coins that meet all of those criteria, but are just a little bit above the bullion coins. So traditionally it's been about $2.99 to $3.99 above spot for your typical eagle, maple, or standard Perth issue. Your semi-numismatic coins usually are going to be about $1 more than that, and I found in the past that it's worth that extra dollar to pick up those collectibles. And again, the Silver Eagle does have that collectability based on date, but the design doesn't change, and that's the same with the Canadian Maple Leaf, and it's also the same with the Philharmonic. The design of the coin is the same year after year, whereas the Perth Mint and others, those designs change every year. So let's get over to some of these market issues that I wanted to talk about and how silver is going to turn out to be a lot different than many of these other commodities that are traded. So I wanted to look at two definitions before we get over to the type of good that I think silver is. And so the first thing we want to look at is price elasticity of demand. So it's not really that complex, although the formulas and everything else make it complex. Basically, what price elasticity of demand means is that as the price changes, that has effect upon demand. Price elasticity of demand is a measure used in economics to show the responsiveness or elasticity of the quantity demanded of a good or service to a change in its price. So in a normal market, when you see prices go up, you'll see demand go down. And I'm going to contend that we're probably going to reach a point with silver that there's going to be a point when price reaches, I will say, above $50 an ounce. We're actually going to see demand increase. So that's going to be an anomaly. That's going to be inelasticity, and that's something that is the reason I believe why the powers that be fought so hard to keep silver from going above that $50 price. Now, the other concept is going to be elasticity and inelasticity based on supply. So if you look at this chart from MatthewPearsons.com, it shows you in a simple way understanding how that works. This chart is perfect elastic supply, and that's the example is matches. So if the price of matches rises, then obviously you're going to see a lot of supply. People are going to make them, and that's going to bring the price back down. Now, the other one, the opposite end, is the example is the Mona Lisa. So if you see the price of the Mona Lisa rising, there isn't going to be more supply because it's a totally unique item. So these are total extremes, but it gives you an idea of how that works. Now, the way that that comes into play with silver is that silver, as of now, is mined as a byproduct. So as the price of these secondary metals rise, then they end up mining more of them and getting more silver. But if silver rises alone in price, that doesn't mean that they will be mining more of the base metals, and that doesn't mean that they'll be getting more silver, because there aren't that many primary silver mines. Now, as Jeff Nielsen has pointed out, that's not something unique about silver in the way that it's in the earth or anything like that. That's really just a function of price. Once the price of silver goes high enough, then we're going to find that a lot of these base metal mines turn into primary silver mines. So this argument doesn't hold perfectly, but it certainly holds for the low prices that we're seeing. So if we see the price of silver rise up to high 30s, 40s, and even near 50, it's highly unlikely that we will see the supply of silver react to that. And there are a long lag periods of time where the mines have to get online, and if new silver mines are going to be brought online, that there's large lag times, a large number of years required for those to be ramped up. So there is a serious inelasticity for silver. So the question we want to look at is, what type of good is silver? Now, a lot of people have talked about this term, a Giffen good. And a Giffen good is a good that violates the traditional rule of supply and demand. And so let's read the definition here real quick, and I'll explain to you why I don't think this applies to silver. In economics and consumer theory, a Giffen good is one which people paradoxically consume more of as the price rises. Now, to understand why that works, and that says violating the law of demand. Now, to understand how that works, you have to understand this analysis, the necessary preconditions for this situation to arise. And they are: 1, the good in question must be an inferior good. Now, one could argue that may be applicable to silver as compared to gold. Secondly, there must be a lack of close substitute goods. and that is arguably true. Third, the good must constitute a substantial percentage of the buyer's income, but not such a substantial percentage of the buyer's income that none of the associated normal goods are consumed. So that really doesn't apply to silver. That the example they use is when the prices of food are rising, the prices of bread, or the use of bread, actually goes up because it's the cheapest. So this is the concept of a Giffen good, and I don't really think that's applicable to silver. But there's another good mentioned here, and this is called a Veblen good, and that's closer to silver. Now, in economics, a Veblen good is a member of a group of commodities for which people's preference for buying them increases as their price increases. As greater price confers greater status. Instead of decreasing according to the law of demand, a Veblen good is often also a positional good. The Veblen effect is named after economist Thorsten Veblen. Now, I'm not arguing that it's a Veblen good because it's considered a luxury good and they give wines and handbags, etc. And they talk about these related concepts. The Veblen effect is one of a family of theoretically possible anomalies in the general theory of demand in microeconomics. Other related effects include the snob effect, preference for goods because they are different from those commonly preferred. In other words, for consumers who want to use exclusive products, price is quality. Now, this is something that may be an explanation for why we get this increasing premium on the semi-numis and numismatic coins, and that premium so far, from what I've seen, has actually outpaced the increase in the price of silver. So people who have purchased those numismatic and semi-numismatic silver coins have actually made out better than the people who have said that you need to get the most amount of silver for your money. Now, that may or may not hold in the future, but that's not really the effect that I wanted to look at. The effect that I think is going to be the key effect with silver is the bandwagon effect. The preference for a good increases as the number of people buying them increases. The bandwagon effect is a well-documented form of groupthink in behavioral science and has many applications. The general rule is that conduct or beliefs spread among people as fads or trends clearly do, with the probability of any individual adopting it increasing with the proportion of those who have already done so. Now, that is very much like the greater fool theory, and they're not necessarily buying it because they expect somebody to buy it from them at a higher price, but they're buying it because they see everyone else buying it. Now, I think ultimately that's going to be, rather than silver being a Giffen good or a Veblen good, I think that silver will be affected by the bandwagon effect. And when we get through that $50 price target, that's going to be confirmation to the general public that there is an inflation problem. Probably at that point in time, the price of gold will be out of reach, and so that does have some Giffen aspects to it. But at that point, we will see a bandwagon effect in the purchasing of physical silver, and I think it's going to be that bandwagon effect that ultimately catapults physical silver beyond that $50 price target. Rapidly, I'm expecting that when silver does get above that $50 price target, and now I think it's just a matter of time once we take out some of these resistance levels, and I expect a sort of slingshot effect probably up to around 75 and maybe even higher, and then something similar to this price move that we had here, where they actually run it much higher than is sustainable and then crash it down and probably bankrupt a lot of the people who have weak hands, who bought at 50, 55, 60, 65, 70, and they probably will want to take it down to around 45 or 42, and that's then going to be the next leg up from there. And we'll talk to you next time.